Bismillahirrahmanirrahim. Welcome to Mastering Accounting Skills, the one and only YouTube channel offering free training on practical accounting skills. Before we go to the topic, hit the subscribe button and switch on the bell icon for getting notification of my new video. So guys, today our topic is accounting for accounts receivable. If you are planning to start your career as an accounts receivable professional, watch this video till end, because in this video we are going to discuss A to Z all the things with regard to accounts receivable accounting. This topic is also of great help if you are expecting any interview in near future for accounts receivable role. Let us go to the topic. The topics one by one we are going to discuss in this video. First of all, we will see what is accounts receivable function. Accounts receivable refers to customers' general ledger accounts. It reflects any amount of money your customers owe you against the supply of goods or services. Under cash basis of accounting, there is no concept of accounts receivable. In accrual basis of accounting, accounts receivable is generated against the sales. Accounts receivable is classified as an asset and reported in the balance sheet under current assets title. Accounts receivable is the control ledger account of all customer subsidiary ledgers. Means the ending balance of AR control account is always equal to the ending balance of all customers' general ledgers. Now take a moment and review what we have discussed here. Now in this slide we will see what tasks and duties we need to perform as an accounts receivable accountant. First of all, creating new account. Whenever we are going to create a new account, we should make sure that all necessary documentation and manager's approvals are properly done. Second task what we need to perform is keeping a record of customers' business license and registration details. We need to maintain a customer master file. In that file, for each customer we should have their legal registration details and the contact details, everything we should have to maintain this file in this file. Third thing is recording all customer transactions. So we need to record all customer invoices, credit notes, refunds, payments and the discounts. Task number 4 is we need to ensure that all invoices and credit notes are perfectly documented. Invoices must have customer stamp and signature, and similarly credit notes must be signed by the stores and the receiving department. At number 5, as an AR accountant, we need to ensure that all customer receipts are properly documented and recorded in system. It means that for each customer payment, a receipt voucher must be filled by the receiving person and it should be recorded in the system correctly. All the customer payments must be recorded in the system in the same day or the very next day. There should not be any delay. At number 6, interaction with your customer in a professional manner. You must have perfect communication skills to interact with your customers regarding collections, account reconciliations, or if any adjustments required in the customer account, you need to communicate with your customer properly. At number 7, reporting with regard to customers. So for example, here I will discuss with you some of the reports that you can prepare for your management, like customer balance summary report. So this report consists of all customers ending balances as of the reporting date. Okay, then there is customer general ledger report. Okay, this is for each customer general ledger report, so all the transaction in outs it is coming in the ledger. And then the customer statement report for the unpaid invoices. This for each customer you are sending for the collection this a statement for the unpaid invoices. Then the very important report is customers aging report. So this report also is very important, and we will discuss in detail in the next slide. Next, as an AR accountant, you need to implement effectively credit policy of your company. You need to communicate with your sales team, with your customers clearly the credit policy of your company, and make sure that it should be followed by each customer. If anyone from your customers or from your sales team is overruling and not following the credit policy of the company, a necessary action as per the credit policy of the company should be taken. As an AR accountant, it is your duty to highlight if there is any ordinary or extraordinary delays in the payments by the customer. In your month-end reporting, you need to highlight these things to the management. Next is reporting doubtful debts. If after doing all the necessary efforts still there are some customers who are not paying, then you need to report these doubtful debts in your month-end closing to the management. And also at the year end, you need to create provision for these doubtful debts from your profit. In order to do the cash budgeting as an AR accountant, you need to forecast your customers' collection, and then at the month end, for each month you need to do this forecast, and then at each month end you need to make variance analysis of the collection what you have forecasted versus the actual collection. Regarding this customer collections forecast, I will make one video soon on cash flow forecasting. So in that we will discuss that how we can forecast the customers' payments. The last thing what you need to do as an AR accountant, you have to coordinate with your sales team regarding implementing of the credit policy, regarding customer sales orders. So everything you need to coordinate with your sales team for the customer returns. If there is any issue in customer account, that also you need to communicate with the sales team, because sales team is the one who is directly visiting regularly the customers' premises, so they can convey your message and they can solve the issues. If there is any problem in the accounts, they can help out you in clearing that issue, in resolving that issues, and also they will help out you in implementing the credit policy of your company. In this slide we will see what is aging report of the customers, accounts receivable aging report. So here in front of us one sample aging report of one company. So here as you can see we have all customers' names. Then we have next column there is invoices coming from 1 to 30 days old, then 31 to 60 days old, then 61 to 90 days old, then 91 to 120 days old. So this report is actually telling you about the aging of the receivable from the customer. So this aging report of AR, it actually shows for each customer balance categorized in current, in 30 days old, in 60 days old, in 90 days old, and 120 days old, and so more. Then this report is also used to follow up the collection of AR. Also, it will highlight the debt amounts to be written off as bad debts at the year end. Okay, you can review in this report that what customer balance, it's since long time the customer is not paying, so it is doubtful and we need to create the provision for this. Just take a moment and review what we have discussed regarding AR aging report. In this slide we will discuss a very important task of accounts receivable accountant. This is AR reconciliation. So there are three types of reconciliation issues we can face in a company. The first one is aging report amount versus the AR general ledger balance. It may be due to some unapplied payments or some general entries you passed in the system, so it will make problem, it can make problem in the balances as per your aging report and as per your trial balance. To rectify these type of errors and to match your balance as per your aging report and as per your trial balance, you need to list down all of these unapplied payments and journal entries, and then you need to apply these things to the customer invoices. After that it will match your balance. The second type of reconciliation is your AR control account reconciliation. You need to match your trial balance figure, you need to reconcile your trial balance figure. So and the third one is the each customer GL reconciliation. Okay, each individual customer how you will prepare, and the control account how you will prepare. So first we will see the control account reconciliation. So here is one sample table we took. So the AR, it is showing the AR opening balance and add the sales less total receipts and discount allowed, and after that AR closing balance is coming. So this figure is the opening trial balance of your company. Suppose if we are now going to close the month of June, so as of 31st May our trial balance was showing 1 million our AR balance. Okay, then during the month of June we make the sales 500,000, so we will add in this opening balance this sales. Then total receipts during the month of June, it is 550,000, and then we will less the discount what we have allowed to our customers, so it will give us the balance. The calculated figure will be 945,000. So this 945,000 should match with our trial balance figure of AR as of 30th June. Okay, then regarding each customer individual general ledger reconciliation. So this how we will prepare for this reconciliation. First of all, you need to ensure the accuracy of your data entry into the accounting app. For this purpose, there must be daily or weekly checks by matching the physical documents, the invoices, returns, and the receipts with the computer printouts. So you will keep in front of you all the receipt vouchers, and then the for the customer, and then you will take the printout of the customer, and you will match that. Okay, all the receipts what I have received physically available, this I have properly entered in each customer journal ledger, I have properly entered. Then you will keep in front of you the physical invoice file, then one by one you will check on daily basis if you can do, or on weekly basis you will check that. Okay, in the last week I have prepared this 30 invoices, so this 30 invoices correctly it is entered into the customer statement, it is coming there, or there is some problem. So you need to check the verify your data entry. Secondly, you need to match your general ledger with statements received from the customers. It is ideal at the time before issuing any payment to the customer, especially before closing annual books of accounts. All GL must be reconciled by the AR accountant. Now take a moment and review what we have discussed regarding this individual customer general ledger reconciliation. Another very important task of accounts receivable accountant is AR collections. So a sale without a collection is of no use. So collection is very important in a business. So first of all, keep it in your mind the threefold purpose of collection. So the number one, you need to collect the payment. Number two, to retain the customer. It's not like this that you will collect the payment but the customer is angry with you and he don't want to do any more business with you. Okay, so the second purpose of collection is to retain the customer. Then the third one is to build the goodwill of your company, means you will make the collection of your AR in a way that your customer is happy with you and he will refer your company to other people also, other people's in the market, that this company is good. They have very good relationship with their customer. So you have to build also, you will collect the payment, you will retain your customer, and you will build the goodwill of your company also. So this is the threefold purpose of collection. Now take a moment and review this threefold purpose of collection. Now I will share with you some tips how to collect your money on time. So first of all, you need to develop a crystal clear credit policy. Your credit policy must be specific and clear to your customer. And secondly, you can offer a financial incentive on early settlement, like if an invoice it will be due after 60 days, so you can offer your customer that I will give you 3% discount if you will clear this payment after 30 days instead of 60 days. Then at third, you need to schedule regular reminders to your customer before any invoice becomes due. Like you can send a 15 days earlier an email with the updated statement of account, and after 7 days you can make a phone call to make sure that the payment will be ready on time. Ask your customer if there is any issue in the statement or if they need any invoice copy or anything else. Then next, never give them an image like the payment is due and you do not know about it. Always be on time. Next point that you need to care about is if your checks are ready at your customer office, arrange immediate collection of the check. Otherwise it will pass an image that your company is less caring about timely payments. So next time they will think about to delay your payment and pay an other supplier who is more strict and conscious about timely collections. Then next step is, if your customer not paying on time, restrict further selling until and unless they clear the dues. Or for extraordinary delays, arrange to serve the legal notices. Now take a moment and review all the collection tips what we have discussed here. In next slide we will see the accounting journal entries for the accounts receivable. One by one we will discuss all the accounting entries. Although these entries nowadays we have the accounting applications and we do not need to pass these entries, but we should know that whatever invoice we are making or whatever payment we are making on the back end, what entry system is passing. Okay, so one by one now we will see. The first one is to record the sales under periodic inventory system. If your system is following periodic inventory system, so what entry you will make in case of sales? So the entry will be accounts receivable. You will make it debit, like suppose I have make a sale of 10,000, and credit you will give to sales, the revenue account in your chart of account. Okay, so the debit and credit equal for this entry. So this will be entry under periodic inventory system. And what will be the entry under the second entry? To record the sales under perpetual inventory system. In case of perpetual inventory system, this entry will be changed, because in perpetual inventory system accounting apps are updating the inventory for each sales and for each purchase transaction. They are updating the inventory. So the first two entries will be the same in perpetual inventory system, and then to record the reduction in your inventory you will enter cost of goods sold. It will be debit, like suppose the cost of this item what we sell for 10,000 is 8,000. okay, and inventory account you will give credit, that your inventory is deducted with this cost 8,000. okay, so your debit and credit for the accounting entry is equal. So this will be the your accounting entry for to record the sales under perpetual inventory system. Then to record the sales if there is VAT. If there is VAT involved in this transaction, then you will record the sales here. Output tax you will give credit with like 5%. If there is 5% VAT, then 500 will be the VAT amount. okay, and this your accounts receivable will be debited with amount 10,500. So this will be the change in the accounting entry, okay, under perpetual inventory system. If there is periodic inventory system, then this entry will be removed. okay, it will be 10,500 under periodic inventory system. So this entry will be for the account for the sales entry if there is VAT involved. Next, what will be entry to record a discount on early cash settlement? Suppose I need from my customer 10,000 and I ask him to clear the invoice instead of 30 days, pay me after 10 days. I will give you 2% discount on that. So what entry I will make if the customer will pay after 10 days? So I will make my cash account debit with 9,500 sorry 9,000 2% discount will be 200. okay, so 9,800 I will give debit to my cash account. Then discount allowed, it will be debited, my expense will be increased by 200. Then I will give credit to accounts receivable with the amount of 10,000. So it will be entry general entry in case of I am offering some discount on early cash settlement. Next entry, accounting entry to discuss, is to record customer cash payment. If there is cash payment, no discount involved, then 10,000 will be debit. Okay, and this entry will be removed. Okay, I have received 10,000, so accounts receivable credit and cash account is debit with the amount. Then we will see to record a customer check payment. In case of check payment from the customer, we will not give debit directly to the bank. Like some accountants, they will debit the bank, because just we have received the check. It is not clear still in our bank. So what we will do, we will give debit to notes receivable. Okay, because still we get the check, but it is not cleared in our bank. So we will pass this entry, notes receivable, with the amount of 10,000 debit, and accounts receivable will be credit. This will be the entry to receive a check payment from the customer. Next accounting entry, to record customer check bounce. When we will deposit the check, customer check in the bank, so what entry we will pass? We will pass bank, okay, with 10,000, and notes receivable we will give credit with amount 10,000. So this will be the entry when we are depositing the check in the bank. So if the check is bounced, what entry we will make? We will make notes receivable. Okay, we will make it debit, and bank account we will make it credit with the 10,000. Okay, but still this check is now removed from our bank, because we give debit when we deposited the check in bank, and now the check is bounced from bank, so we give credit to the bank. But still this check is not removed from the customer statement. To remove this check from customer statement, what we will do, we will make accounts receivable debit with amount 10,000, and notes receivable we will give credit with the amount 10,000. So like this, our accounts receivable will be increased, and the notes receivable balance will be decreased from the 10,000, that this check is bounced and the customer balance is now increased. What is the next accounting entry? It is to record other gain on customer account. What is other gain on a customer account? Sometimes some customer, okay, we need from him 500 dirham, okay, but by mistake they make us one payment like 550, and we want to make this return to the customer. The customer balance is now going credit. Customer balance is always debit, but it's now, because they paid more, so it is going credit. The customer balance is with 50 dirham, their account is going negative. And if for a long time the customer, we do not have any contact with customer, the shop is closed and we do not have any contact with them, and still this balance is continuing for long period, for 1 year, 2 year, it is going negative. So what we can do, if we want to make this account zero, so we will make our accounts receivable with $50, we will give debit, and the other gain and income account, this we will give it credit. This is if we want to adjust this account, but it is preferred to keep this balance in the customer account, because in future at any time the customer can claim this amount. But if long time, 1 year, 2 year, 3 year passed, and still the customer is not coming in contact, and there is no more business for this customer, they are not in the market, then you need to adjust this amount like this, other gain. Next accounting entry, to record the doubtful debts. Now here we will discuss a little bit about accounting for bad debts or accounting for doubtful debts. Customers who are unable to pay, a provision must be created for that doubtful debts. For example, a customer named as Ahmed Electronics LLC has an unpaid balance of $1,500. So this customer is unable to pay this balance. So at the end of the accounting period, at the year end, the following accounting entry, this will be passed. What we will do, we will make bad debts expense account debit with $1,500, and credit we will give allowance for bad debts or the doubtful debts with $1,500. So this will be the entry to record the bad debts. So bad debts expense is an income statement item, and whereas allowance for bad debts is a contra asset account, and it will be deducted from accounts receivable balance in the balance sheet. Later, when it is discovered and it is clear that this amount is totally unrecoverable, it is not recoverable, then AR will be written off from the books of accounts by passing the entry allowance for bad debts. You will give debit, and accounts receivable you will give credit with 1,500. Okay, now you have written off this amount from your books of accounts. It is no more in the AR balance. Okay, and in case you have written off this amount and then the customer is paying you, in that case, what entry you will pass, you will make here again, you will make here your bank account 1,500 and other income you will give credit with 1,500. Okay, so this entry, in case you have written off this amount from your AR balance, and then customer is paying you, and you have closed the books of accounts and everything, year end closing, everything you make it, then you will pass the entry like this, and in the description you can mention that the customer was written off as bad debts, they paid to us. Okay, like this you can write the description. Then the next one is to record to write off a confirmed bad debts, and then to record if customer finally pays after return of this. Already we have discussed in accounting for bad debts in the previous slide. Okay, in next slide we will see AR turnover and average credit period. So what is AR turnover? AR turnover ratio tells us how fast our customers are paying their bills. The formula to calculate AR turnover is total net sales divided by average accounts receivable. The higher the ratio is, the faster your customers are paying you. Now we will do some practical that how to calculate AR turnover and average credit period. So guys, here in front of us we have the balance sheet for year 2010 and year 2011, and income statement for year 2010 and year 2011. So on the basis of this data we need to calculate AR turnover ratio for the year 2011, and we need to calculate average sales credit period for the year 2011. So the formula for AR turnover is net sales. So what is the net sales for 2011? This is 9,710,468. Okay, we will apply this amount here. And average accounts receivable, average accounts receivable means AR balance opening plus AR closing divided by 2. So this will be average accounts receivable. So it will give us the answer 2.07 is our AR turnover. Okay, means a customer an average customer is paying us 2 times in a year, means almost 6 months credit period. We will check now this average sales credit period, how to calculate. So here the formula is number of months. How many months in a year? 12. So 12 months divided by AR turnover 2.07. so after calculation it will give us the answer 5.79. means average customer is paying 5.79 months. Okay, if we want to calculate in the number of days, then instead of months we will write here 365. So it will give us that 175 days it is taking. Okay, if we want to calculate in weeks, so 48 weeks in a year. So how many weeks customer is paying? 23 weeks one average customer is taking to pay our dues. So this is the calculation of AR turnover and the average sales credit period. Now we will discuss importance of accounts receivable turnover ratio. Why we need to calculate this AR turnover ratio? So accounts receivable turnover ratio is an efficiency ratio. It is an indicator of a company's financial and operational performance. A high ratio is desirable as it indicates that the company's collection of AR is very frequent and efficient. A high AR turnover also indicates that the customers are paying their debts very quickly. On the other hand, a low accounts receivable turnover ratio suggests that the company's collection process is very poor. Additionally, a low ratio can indicate that the company is extending its credit policy for too long. It is also useful to compare a company's ratio to that of its competitors or similar companies within the same industry. Now just take a moment and review why it is important to calculate AR turnover ratio. I hope the knowledge we have discussed in this video will add value to your professional skills. Subscribe my channel to know more cool accounting skills. Thank you.